Well, let's welcome in Siddhartha Khemka, who's now with us. He's Head of Research, Wealth Management at Motilal Oswal Financial Services. Sid, good morning. Good to have you here. Thank you very much. This is an exciting space, the CDMO space, and we had Cohans with us, and we've had so many other companies speak to us over the last 2-3 months. What's the strategy? I mean, it's if one wanted exposure, and one should have exposure in this space, if this is going to be, it's going to become big in terms of size, scale, etc. Own a bunch of these businesses or anyone in particular, if you have coverage, Sid?
Yeah, good morning, Prashant. Yeah, glad to be on the show. I think, yes, it's an exciting space within the overall healthcare segment. I think US generics has its own challenges, and in that space, CDMO as a segment is emerging as a good growth segment. Plus, there are a lot of opportunities, as you rightly highlighted, the GLP-1. A lot of Indian CDMO players are focusing on that segment and are benefiting out of it. The best way, as you rightly said again, is to play through a basket. It's very difficult to pick one stock while we do have our top picks, but because you have a lot of regulatory challenges, you have the segmentals, geographical expanse. So what we like DVs among the larger ones, Laurus Labs in the mid-cap space. Cohans, we don't have coverage yet, but definitely an exciting space, or the entire CDMO space to be in. And within the healthcare pharma space, that's the segment to go with.
Okay, all right, got that, Siddharth. Morning. By the way, the numbers on the defense side, first we were discussing Bharat Dynamics disappointing. Now look at Mazagon Dock. I mean, we have to find out what happened. Margin has gone from 17% to about 3%. So clearly, I mean, this is lumpy, you understand that. But given how the stocks have run up, your assessment?
I think generally, yes, these are lumpy businesses, but Q4 generally tends to be a much better quarter and a higher base. I think we need to understand what happened there. Definitely, stocks have moved up in anticipation of the long-term growth opportunities, the defense orders that have come in. But with these kind of numbers, definitely it warrants a closer look. We have coverage on BEL and HAL. We unfortunately don't cover Mazagon Dock yet. BEL came out with strong numbers, and the outlook remains strong. So we see at least 18-20% earnings growth. Valuations at 34-35 times looks attractive. So we maintain a positive view on Bharat Electricals. That is our preferred pick within the overall defense space.
Okay, hi Sid, good morning. Nice white jacket. I think it's whitish or it's a light grey. Looks like you're all set for Friday, Sid. That said, what about some numbers that came yesterday? Bajaj Auto, how do you read those numbers? The management is guiding far optimistic on export sales rather than the domestic piece, more or less in line with what the street was working with. Your view on the stock?
Yeah, hi Nigel, good morning, thanks. I think it's a slight grace jacket for sure. In the light, I think it's looking white, but...
Whitish, yeah, I was wondering.
So coming to Bajaj Auto, yes, numbers have been pretty broadly in line with our expectations. Margins have remained stable at 20.2%. We are seeing benefits from the favorable currency as well as improved mix. While there has been some impact of stoppage of exports to KTM and the higher promotional spend. Overall, what we see that the recovery in exports and the healthy ramp-up in the Chetak and three-wheelers are key positives. However, what we are also seeing is that there is a market share loss in the domestic motorcycle segment, that too in its key segment, that 125cc plus segments, and that we see as a concern. Further, the ramp-up of its CNG bike, that is Freedom, that has been slower than expected. Yes, another positive, the acquisition of the controlling stake in KTM in a lucrative deal, that is also positive, and we'll need to see how effectively and how quickly the turnaround of its operations are. So net, while the results are positive, the stock could see some positive momentum today, but largely because of the loss in market share and some of these key monitorables of turning around KTM, we remain neutral on Bajaj Auto.
Well, let's go back for a couple of ideas with Siddharth. Siddharth, so you tell us it's been a whirlwind earnings season, winding down finally. So give us one or two top ideas.
Sure. So going with the recent updates, yesterday Suzlon came out with strong numbers. We recently initiated the stock, strong set of numbers, much ahead of our expectations. And what is also important is that management has maintained its positive outlook and has guided at least 60% growth in terms of deliveries for the next year. So we believe that the strong delivery could continue, and that could again lead to re-rating. Stock had corrected from its previous highs and now looking attractive both in terms of business as well as in terms of valuation. So that is something that we believe can continue to do well in the mid cap space. What also looks interesting is that some of the companies, so for example, the hotel sector, that continues to do well. Lemon Tree in the mid cap space, that came out with strong numbers. We believe that within the discretionary spending, the hotels or the leisure travel in India, that continues to be pretty strong. And in that space, in the mid segment, Lemon Tree has a strong positioning. Some of its newer initiatives, the Orica brand, that is picking up now and is contributing to the overall profitability. So that's another stock in the mid cap space that we believe can do well. So Lemon Tree is a buy with a target price of 190. Suzlon, as I said, we have a buy rating and a target price, revised updated target price of 83.
Okay, all right. Sid, before we let you go, any view on Wellspun Living? The textile business, there is hopes out there. The flooring business actually is not able to scale up. Just looking at the past numbers. But there could be an opportunity out there with the India-UK FTA being signed. Hopefully, India gets a favorable deal from the United States as well. Any view on the stock?
Nigel, unfortunately, we don't cover this space.
From the textile space, you all don't have any pick at all. Okay, all right. Just one more quick question. From the pipe makers, we have all sorts of pipe makers. I think APL Apollo is the one that you like, right? The pick of the pack?
Yes, Nigel.
Got it. Okay.
So within the pipe segment, APL Apollo is the only one that we cover. Astral is the largest one. But if you look at APL Apollo, is more into the structural pipes and not into the PVC pipes. After a very long time, numbers have started coming in strong. Q4 led by a healthy volume growth of 25%. We are expecting demand to recover, margins improvement to be supported by capacity addition across geographies, and also higher exports. So that's a stock in the mid cap space. Again, we have a target price of 1920 on APL Apollo.
Okay, all right. One more before we let you go, Sid. The cement pack, delivered actually a rather good set of numbers, little better than what the street was estimating. And things were looking up for first quarter. However, the early onset of monsoons could spoil the party. From there, what do you like?
Yeah. I think cement has been a mixed bag in that sense. Some of the larger ones, Ultratech, JK Cement, JK Lakshmi Cement, came out with pretty strong numbers. Monsoon this year expected to be much ahead of the normal, and that could lead to some impact in the near-term volumes. But the long-term trend, we believe, will continue to be pretty strong. We like JK Cement. We have a buy rating with a target price of 6,000. We believe that, again, while Q4 numbers has been pretty strong, JK is one of our preferred picks in the cement sector. We are expecting a good growth in volumes, better profitability. Even the UAE plant for JK Cement is picking up pace, and that is also contributing positively to the overall profitability. We have forecast a revenue CAGR of 15% and a net profit CAGR of 30% over the next 2 years. And that remains our top pick within the cement pack.
Okay, all right, got that. So that lots of ideas today. Thank you so much. You have a great Friday, and we'll connect again soon. Thanks for joining in.